I want to also talk about country bias. So when comes to investing, um, except for US, uh, if if you're from other parts of the world, except for US, like I'm from Canada. Let's say if you're from uh, China, or if you're from India, or if you're from Iran, or you're from Japan, or you're from Hong Kong, or Europe. Uh, um, you know, lot of times when you go and talk to these financial institution, or like or you when you read news article from your country, they specifically cover your region. So you generally tend to have biases towards your country, that you tend to invest in basically um, you may limit yourself in investing to your country. So this is something very important thing for anyone who's outside US. Basically, the reason is this. So if you think, see, this is a chart that shows the largest stock exchange operators worldwide as of October 2022. So this is very important. So if you think about it, United States is the largest by market capitalization in the world. They are almost like $40 trillion dollars. As you can see, it says in trillion dollars. Um, the next is China, which is 5 trillion. And let's say I'm in Canada, so Canada is just 2.76. So think about it. I'm from Canada. I read news from Canadian financial papers. They mostly they do cover other parts of the world, but you know you when you are from a certain country, you tend to have biases because you know either you're born there, you're raised there, used to the culture. So you would think, hey, you know what? I'll just go and invest in, let's say I only invest in stocks from Canada. But guess what? The Canadian stock market is teeny tiny when compared to when you compare the entire world, where United States is like 40, 40, almost 40 trillion, 40 or 50 trillion dollar economy, right? So which is when compared to Canada, which is this two. So it's kind of like um, uh, uh, 20, 20, 20 times, 20, 30 times. Uh, you know, United States is bigger, so it's big. It's huge, humongous. So therefore, like it's natural for people to have these country biases, but when it comes to investment, you need to set aside your emotions, and you need to be very much you need to think from the maximizing the return perspective. So therefore, like if you're from other parts of the world, like if you're not from US, let me put it that way, um even from US, people will have their country biases, but for US it's okay because the fact is their stock market is huge. So therefore, even if they are biased and then they invest, they still kind of diversified. Whereas, like if you are from other parts of the world, let's say you're from India, um, it's like I think India is like national stock exchange. You can see it's 3 trillion. So which is like which is which is still very very small compared to United States, and you're not diversified enough. So therefore it is very important to set aside this country bias and think from the overall portfolio perspective to see how you can maximize your returns. So and see what are the various options you can have, and then try to tap into those and see if you can invest elsewhere. Like for example, if you're in Canada, can you invest in US? It's possible, right? Let's say if you are in India, is it possible to invest in Canada or like in US? Like for example, let's say not Canada, US, right? Can you invest in US indices? You have to check out these options with your financial advisor and invest accordingly, because the whole point of asset allocation is to maximize your returns, right? So you don't want to have these biases that may hinder it. Okay. So the next thing is you want to have an you need you want to you want to have an investment goals, as well as understanding of the risks that each of these investment vehicles may have. So this is a good pyramid that explains the high to low risk item. So for example, if you invest in bonds or money markets or CDs or bank accounts or cash, the risk is low. Whereas if you invest in real estate, equity, large, small caps, high income bond and debt, the risk is medium, right? In it's at it's high risk when you invest in options, futures, or cryptos. These are high risk investments. When it comes to investment goals, you need to have the time horizon. So I talked about like age may or may not be a factor because, for example, you may be young, but that doesn't mean that you go and invest in, non-liquid funds that you cannot liquidate because let's say like you have a goal to go to like do your higher studies, right? Let's say you go and invest every money in stock market, perhaps you know you may not be able to take that money out because stock market can have a lot of volatility, right? So it's somewhere in the here the risks are there is some risks. So therefore depending upon how the market fluctuates, you know there can be substantial risk. So therefore like you cannot right away liquidate that stock position and then come back to your and then take that money and then go and do your higher studies. So age is not a factor. I think it's the most important factor is the time horizon. How long you want to invest. Let's say like if you want to invest for longer time, then perhaps you can have a mix of high risk versus medium risk. Let's say if you want to invest for a shorter time, maybe like 6 months. I'm just making it up. If 6 months, then it may not be a good idea to go and invest in real estate or like stocks. You might as well keep it in some sort of a bond, with a good good rate, and then you can. So it is important to understand the risks associated with various investment vehicles. So and based on these risks, you have to construct your portfolio. So I'm going back to the asset allocation. You want to maximize the return based on risk tolerance. So let's say if you are willing to take higher risk, right? Yes, then perhaps you can get into cryptos or options or whatever, right? And provided you have that time horizon, then your portfolio can consist of some of those assets, right? But let's say like if you are a person who is highly risk averse, you're somewhere here or maybe somewhere here, then you need to consider your time horizon. Okay, if you have 2 3 years, perhaps you can put some money in the make equity mutual funds, some portion for in a bond. So so that Two key things is time horizons and your investment risk. These are the two key factors you need to consider when you think about your investment portfolio. And based on that, then you can start constructing your portfolio. So what I have done is I've shown a typical like my pick my if I have to construct my portfolio, like either if I'm a conservative investor or an medium risk taker or an aggressive investor, how would that portfolio will look like? So I've given some examples. These are my own. I just want to guide people, how you go about, specifically if you're young, or like if you just started investing, you don't have that understanding. Perhaps this video, I'm hoping it will help you. So